Hello everyone, warm welcome to Supercoaching Regulatory Bodies YouTube channel by Testbook. मेरा नाम है माधव अरोड़ा. I welcome you all in a very important session where we are going to discuss two important functions of RBI, and majorly we will be focusing on the first one, that is what is WMA. Remember that WMA is one of the important concept, and there is a great probability that many questions can be asked in the examination on WMA. And to support my statement, to support my words, in 2024 phase 2 examination there was a question related to WMA. Yes, there was a question on WMA in this year's examination itself. So keeping the same in mind, I have come up with this session where I will be discussing one of the important term that is known as WMA. Basically, RBI is known as government's bank. Why RBI is termed as government's bank? Because RBI provide all the banking services, or I would say all the banking services provided by your bank is provided to the government by RBI. That is the reason you say your bank is SBI, I say my bank is ICICI, and government says their bank is RBI. So RBI provide them the account facility where the government, they can deposit their funds, the funds can be credited, debited as per the requirement. Similarly, if required, government can borrow the funds from RBI. In terms of borrowing, this WMA comes in the picture, which we are going to discuss in today's session. So the first point of discussion is what all areas we will be focusing today. So we will be focusing on four major areas. First one, we will be discussing what is WMA. Then we'll discuss the types of WMA. Then we'll talk about the limits of WMA, because this time in 2024 the question was based on the limits only. Then we'll move ahead and we'll discuss the next function of RBI, that is RBI hold the government accounts. Along with that, we'll discuss the different types of government accounts which are holded by RBI, and the last part is RBI and currency. So today I will be focusing majorly on these five topics. RBI and currency we will be discussing in the upcoming sessions to go. So the first point from where I'll start my discussion. One. Okay, I hope now I'm visible. Okay, fine. So as I said that today we will be focusing majorly on the WMA wala part, and I can assure you that this session is going to be really very important for your upcoming examination. So let's get started, guys. Let's get started without any further delay. So first of all, I'll start my discussion with the first point, and the first point is, what do you mean by the term WMA? The moment this term comes in front of you, and if someone asks you that, sir, what do you understand by the word WMA, then your answer should be, sir, the term WMA stands for ways and means advances. But the question is, so what is the meaning of ways and means advances? Ways and means advances basically means whenever government is in need of funds, government can borrow from RBI. Government can borrow from RBI, and RBI provides short-term lending. RBI provides short-term lending advances to the central bank, and that short-term lending advances is known as ways and means advances. Now the question is, so why government require short-term advances? So government requires short-term advances in order to overcome the temporary mismatch in their cash flow. Temporary mismatch means if I talk about government's account, in case of government's account, if credit is less than debit and government is witnessing a liquidity crisis or liquidity crunch, in that particular case, government can borrow from RBI in order to overcome its short-term funds requirement. Third point is, WMA is mentioned under RBI Act 1934, to be very specific, under section 17 of RBI Act, which states that central bank can provide loan not only to the central government, but yes, central bank can provide loan to the state government as well under ways and means advances. Next point, which is important, but before that, remember these 3 points, they are really very important. First is, what is ways and means advances? And it is a short-term loan which is borrowed by government from RBI in order to overcome its mismatch, or in order to overcome its liquidity issues, in order to overcome its credit and deposit facilities, in order to overcome its credit and debit facilities. Along with that, this particular service, or this particular, I would say, initiative of RBI is not only for central government, it is also for state government, and it is clearly mentioned under RBI Act 1934. Next point is, the advances are to be repaid within the stimulated time period. So the advances which you are borrowing, the loan which you are taking, it is need to be repaid within the stimulated time period which has been decided, and this time period cannot be later than 3 months. It can be before 3 months. You can, if you want, you can pay before 3 months, it's fine, but you cannot hold the borrowings before, you cannot hold the borrowing for more than 3 months under ways and means advances. Government is responsible to pay the interest to the central bank on these borrowings, and the interest which is charged by the interest which is charged by the government, the interest which is charged by RBI, generally it is repo rate. So repo rate is the interest rate which is not only charged by RBI at the time of lending done to the banks, but the same rate is also charged if the borrowing is done by the bank, if the borrowing is done by the government from RBI against ways and means advances, or under the category of ways and means advances. Now, if I talk about types of ways and means advances, you need to understand this point more clearly. So whenever we talk about the types, we first have normal type. Normal type is also known as normal WMA, which is termed as clean advances. Second one, we have special WMA. Special WMA is a type of loan where secured advances provided against the pledge of Government of India dated securities, which means if you are borrowing as a government, you are borrowing as per the WMA limit, that is known as clean WMA. But if government is borrowing against government security, government is borrowing against government security as collateral given to RBI. That means if in near future government do not repay back your WMA, then what you can do is, if government is not paying back your advances, you can sell these government securities in order to recover the loan. You can sell these government securities in order to recover the loan. That is known as special WMA. So there are two types of WMA. One, we call it as clean WMA, and the second one we call it as special WMA. Special means the borrowing which is done against predefined prefixed. Borrowing which is done against predefined prefixed government securities as a collateral. If government do not pay back, then that same collateral security will be used by RBI in order to recover its funds. Is it clear, everyone? Is it clear? May I have a reply in the comment section, please? May I have a reply in the comment section, please? Is this point clear to everyone? Those who are live, do reply. Chali, moving on to the next point. The next point says ways and means advances. They are not, I would say, you as a government, you cannot borrow unlimited amount of loan under the ways and means advances. Rather, there is a fixed amount, or there is a fixed limit which can be borrowed, but this limit is not fixed for, I would say this limit is not solid fixed. It is fixed for every financial year depending upon the requirements. So remember that this limit is mutually decided by RBI and central government. If I say generally this limit is decided for yearly basis, as well as it is decided for semi-annual basis as well. As per the latest question which was asked in the RBI, they have asked what is the WMA limit for second half, that means from October to March. What is the WMA limit as decided? So the WMA limit as decided as per the question, the answer was 50,000 crore rupees. So this 50,000 crore rupees, it is mutually decided by RBI and government depending upon the requirement and their needs in order to overcome mismatch in terms of inflow and outflow of the funds. Minimum balances and limits were first fixed on April 1st, 1937. So these minimum balances which government needs to maintain in their accounts with RBI, as well as the limits up to which borrowing can be done from RBI. It was first decided back on 1st April 1937. Remember that limit is basically equals to the ratio of their total revenue and expenditure to the corresponding total of the center prior to the introduction of provincial autonomy. So this is basically the limit which was decided at the time, or this was the formula or the format which was used before independence. As you see, ratio of their total revenue and expenditure, state's revenue and expenditure to the corresponding total of the center, prior to the introduction of provincial autonomy. So if you want to calculate the limits, and earlier this limit was decided on the basis of this formula, but after independence, now the limits are decided on the basis of size of the state. It is decided on the basis of tax collection of the state and the ongoing projects in the state. These are the various factors which are taken into account, but these limits are decided mutually by central government and RBI. Remember that these limits, they were effective earlier from 1st of April 1938. You might be shocked to know that WMA, when it was introduced, it was basically introduced for the states only. When it was introduced for the states only, but later on it was extended to the central government. So remember that in 1953, minimum balances which you need to maintain in your accounts, they were revised. And most important part is, in 1953, in line with the growth in revenue receipts and expenditure in the intervening period, this was considered that your revenue receipts as well as the state's expenditure will be taken into consideration at the time of fixing the limits. So limits liberalized to double the revised balances, as well as a special WMA facility against the pledge of central government security was introduced for the first time. So initially you were not allowed to borrow against these government securities, but since 1953, government is allowed to borrow against the government securities as well. If someone asks you, special WMA was introduced in which year? So it was introduced in 1953. Remember that limits were revised in 1953. They were first set on 1st of April 1935. The formula was also revised in 1953 after the independence received and Government of India was framed in the country. The next is related to 1997. This is very important. WMA scheme was introduced for the central government on 1st of April 1997. Yes, you heard it correct. Till 1997, that means from 1937 to 1997, the scheme was only and only for the state government, and if central government is in need of funds, at that particular moment, RBI was coming up with deficit financing. So what do you understand by the word deficit financing? If government is deficit, government is in need of funds, then RBI will print extra currency in order to fulfill the requirement of the government, but which resulted in excess printing of currency. It resulted in excess inflation rates in the country, and therefore in 1997 RBI came up with the statement कि भाई, I'm not going to print extra currency in order to overcome or in order to fulfill your fund requirement. Rather, if you need funds, then you can borrow for short term under WMA. So since 1997, it has been introduced. So put an end to the 4-decade-old system of ad hoc treasury bills to finance central government deficit. Now, the central government deficit will be financed with the help of WMA. It will be financed with the help of WMA as per the latest report. Is it clear, everyone? So this is all related to your WMA. The next point is, if one side we are talking about RBI function where RBI provide loan to the government, then on the other side we should also understand the accounts which RBI hold on the behalf of the government. So let's get started. Government accounting, if I talk about this, then my answer would be, sir, RBI, as per the RBI Act, it is the bank to the central government as well as the state governments. Secondly, it provides short-term credit to the government. Third, it manages all the new issues of government loans, as well as it provides services the government debt outstanding, or it services the government debt outstanding and nurture the market for government securities. If I talk about RBI functions related to government, then RBI also advise the government on banking and financial subjects. As per Section 20 of RBI Act 1934, RBI is obliged to undertake the receipts and payments of central government. That means in order to help the government to receive the funds as well as to make the payments, this entire operation is need to be done by the RBI as per Section 20 of RBI Act 1934. It will carry out exchange, remittance and other banking operations. That means management of public debt on the behalf of the government. Under Section 20A, RBI has been asked to hold the same or to provide the same services to the state government. All the state governments, they possess their account with RBI and obviously the central government, except Sikkim. Sikkim is the only state which is not holding. Sikkim is the only state which is not holding an account with RBI, rather it is holding an account with Bank of Sikkim, and Bank of Sikkim is basically the organization which is regulated by RBI, but the government of Sikkim is holding its account with Bank of Sikkim rather than RBI as per the other states which are holding the accounts. The next point is Section 21 gives RBI the right to transact government business of the Union in India. Section 21A, it is state government transactions carried out by RBI in terms of agreement with the state governments, and currently such agreements, they exist between RBI and all state governments, as I mentioned, except Sikkim. The next point is RBI carries out the general banking business of the government, and through its own offices and commercial banks, RBI provide the banking services to the government departments as well as ministries. Remember that RBI can also appoint private banks or public sector banks as their agents, and these agents will be providing the banking services to the concerned department, but the appointment will be done by whom? So the appointment will be done by RBI. Now, as per Section 45 of RBI Act 1934, appointment of the scheduled commercial bank as an agent at all the places in India is done by RBI only, as I was discussing this point, but it is written under Section 45. Secondly, for the purpose that it may specify having regard to first one, public interest, it could be related to public interest, it could be convenience of the banking services, as well as it can be related to the banking development. But these all appointments of the scheduled bank as its agent, as RBI agent, is done as per Section 45 of RBI Act 1934. RBI Act 1934. Is it clear? Is it clear till this point? Okay. Moving on to the last point, that is factors which are relevant in this regard. So the factors which are relevant in this regard means any factor related to the given one, they can be used as a measure, they can be used as a reason in order to implement the current policy. Now, under the administrative arrangements, remember that central government is required to maintain a minimum cash balance with RBI, which is 10 crores on daily basis, and it should be 100 crores on every Friday, as well as on the last working day or on the last day of the financial year. Remember that, as I mentioned earlier, that the minimum balances were introduced on 1st of April 1937. These were the minimum balance which I was talking about. Next point is 100 crore at the annual account closing day, as I mentioned, that is 31st of March. Earlier, it should be maintained on 31st of March and 30th of June, because RBI financial year was completed earlier on 30th of June, but now it is need to be maintained only and only on 31st of March, because RBI's financial year is also now coinciding. RBI financial year is also now coinciding with the government's financial year. Moving on to the next point. As per 1976 scheme, every ministry or department of central government will be allotted a specific public sector bank for handling its transaction, and this appointment of a public sector bank to handle its transactions will be done by RBI. So RBI doesn't handle government's day-to-day transactions as before, except where it has been nominated as the banker to a particular ministry or department. Is it clear, everyone? Is it clear till this point? Is it clear till this point? So remember that RBI is providing the banking services to the central government as well as state government. But if I talk about the central government or state government departments, then this responsibility is given to the appointed banks, and the appointment is done by RBI as per the 1976 scheme. Moving ahead, if I talk about the definition, the process of recording and management of all the financial transactions done by government is performed by RBI. So when we talk about the government accounts, we have different types of government accounts, which include Consolidated Fund of India, Contingency Fund of India, Public Accounts of India. If I come up with the first one, Consolidated Fund of India consists of, so it consists of all the direct and indirect credits. That means all the direct and indirect tax credits. Second is, it includes loan taken by the government that will be credited in this account, as well as all the revenue which is received by Government of India will be credited in the Consolidated Fund of India. All loans raised by Government of India, issue of treasury bills, will be also credited under the Consolidated Fund of India. And the last point is, money obtained even by ways and means of advances will also be credited in the Consolidated Fund. So remember that all day-to-day credits as well as all day-to-day debits of the government will be done from the account which is known as Consolidated Fund of India. So government meets all its expenditures from Consolidated Fund of India. Parliamentary approval is required to withdraw the money, and that is the reason we come up with the budget. Once the budget is passed, after passing of the budget, or I would say once the budget is accepted, discussion is done, then appropriation bill is passed in the parliament. This bill is basically, you can say it's a checkbook. It's a checkbook which is going to be approved by the parliament majority, so that the current government can withdraw the funds as per the limits, as per the figures mentioned under the budget, which means Consolidated Fund of India is in the control of Parliament. Without Parliament approval, no funds can be withdrawn from this particular account. So provision mentioned in the Article 266 of the Constitution of India for Consolidated Fund of India. Next is, each state can have its own Consolidated Fund of State with similar provisions as we have discussed for central government, and these accounts, they are audited by Comptroller and Auditor General of India. Moving on to the second account, that is Contingency Fund of India. Provision included Article 267. In this account, all the, I would say from this particular account, funds will be used only and only in case of emergency. Funds will be used only and only in case to meet the unexpected and unforeseen expenditure. Remember that the amount in this account is 500 crores. There was an announcement made that government will increase amount to 50,000 crore, but it was just an announcement. No final confirmation was made, and we believe that it is still 500 crores. But if government wants to withdraw the funds from this account, that is not allowed. If you want to withdraw the funds, you need President's signature. Once President approves, then only funds can be withdrawn. Without President approval, no funds can be withdrawn from the Contingency Fund of India. And remember that in the form of, it can be used or we can say that it is a kind of emergency fund account which will be utilized by the government at the time of requirement. Is it clear? Is it clear, everyone? If it is clear, just give me yes sir, so that we can move ahead. If it is clear, just give me yes sir, so that we can move ahead quickly. Done? Chal. The next point is related to Contingency Fund of India, which I have already discussed, that it is held by Secretary of Finance Ministry on the behalf of President of India, but actually the owner of this account is President of India. States can have their own contingency fund with the same provision, and approval from the Parliament or state legislature is required in case of expenditure. it is not required in case of expenditure. The reason is direct signature is done by the president. President can approve the withdrawal directly with his signature. But once the withdrawal is done, funds are utilized, those withdrawals are need to be audited. Those withdrawals will be audited by the parliament, and if parliament do not approve those withdrawals, then president can be challenged as per the law. Moving on to the next point, amount withdrawn is returned to the fund from the Consolidated Fund of India, because this account is need to be maintain a balance of 500 crores, and if the balance of 500 crore is not maintained, that means let's say 100 crore has been withdrawn, then 100 crores will be credited through Consolidated Fund of India in order to achieve in order to maintain the given balance, that is 500 crore rupees. Then we have Public Accounts of India. Public Accounts of India is basically an account which is mentioned under Article 266 of Indian Constitution. It includes public money, except those under Consolidated Fund of India, which has been received on the behalf of Indian government, are credited to this account. For example, provident funds are credited in this particular account. Along with provident funds, we include bank saving accounts of various ministries and departments. Then we have national saving funds, defense funds are included in this category. National investment fund, that is money earned from disinvestment. This is very important. So money earned from disinvestment, national calamity and contingency fund, as well as provident fund, postal insurance, all these funds, basically those funds on which government is liable to make the payment to the public, that are credited under the Public Accounts of India. And if you want to withdraw the funds from these accounts, government can withdraw the funds only after the approval is given by the ministries, as well as the most important, the leader of opposition. So leader of opposition is always involved in time of usage of the public account funds, because these funds are generally invested by the government so that government can earn return on it, and those returns can be utilized. Those returns can be utilized to pay interest or returns on these deposits, on these funds. So I hope what are ways and means advances, it is clear to you. I hope how limit is calculated and what is ways and means advances limit, that is clear. What are the government accounts, as well as what are the types of government accounts, are crystal clear to you. So if you have enjoyed this discussion, do give me yes sir in the comment section, and that will be all from my side. Yes, exactly, Prameshwar, you are absolutely correct. Prameshwar, you are absolutely correct. I just saw your message late. I'm sorry for that. But yes, you are absolutely correct. Okay, guys, that will be all. We'll catch you in the next session. Bye-bye. Good luck. Happy Diwali, everyone. Good luck.